Hey guys, and welcome back. So there's this absolutely ridiculous idea that we're about to go into a bear market, and today I kind of want to break down a bunch of the different reasons why I think that this is just a complete load of nonsense. And we're going to start out by looking at the Bitcoin chart as it stands right now and taking a look at where we are most likely going. Now, I'm going to put out a very bold prediction here. I think that within the next 12 months, you're going to see Bitcoin double, and Bitcoin's going to rally all the way up to at least $200,000. And the reason that I think that has a great deal to do with none other than the gold chart. I want to show you what happened when the GLD ETF launched and the massive rally that took place thereafter. Now, everybody knows gold has been around for a very long time. We have seen gold changing hands going back millennia. Ever since the dawn of mankind, gold has been an important commodity. And when you look at the gold spot price, you'll be able to see that even before the SPDR GLD ETF came along in about November 18th of 04, gold was a very mature market. It was a very mature market that had been adopted by almost every single nation state the world over, had a very strong supply, had a very strong adoption. It was one of the most valuable assets in the entire world when the SPDR Gold ETF came along. And when you saw the SPDR Gold Trust come along, you would still see an enormous rally on gold. We're going to talk about why this matters to Bitcoin here in just a minute, but just track with me for a second. In the first 2,500 days or so of GLD launching, we would go on to see an enormous rally on gold. Again, massive market, had been around for millennia. Within 2,500 days of launching, you saw a 320% return on gold. That's a quadrupling from a price of $44 at launch on the ETF to about $185. When you fast forward and include the rally that we've seen more recently, gold has actually about kept up with, or even depending on how you measure it, outpaced the U.S. stock market, up over 600% in the last 20 years. Now, that has nothing to do with Bitcoin because it was nothing compared to Bitcoin. Bitcoin was far larger. Within the first 12 months of the Bitcoin ETFs launching, all dozen of them that launched at the same time, within 12 months, you saw $38 billion of cumulative inflows, not total inflows. That's not including, that's including all the outflows from the Grayscale ETF. That is nowhere near as much inflow as you saw into the gold ETF in its first year. In the first 12 months, you saw about $1.5 billion flow into gold, compared to the first year on Bitcoin, where we saw $38 billion flow into Bitcoin's ETFs. The difference is enormous. Also consider the fact that there was one major gold ETF, GLD, and there are about a dozen major Bitcoin ETFs. This is all going to tee us up for why I'm saying that a $200,000 Bitcoin is coming soon, and we're going to explain exactly what we ought to be doing right now as investors in light of that information. Now, when we factor in the fact that Bitcoin saw $38 billion of inflows in the first year, and you look at this chart from Bitwise, you'll see that that's about the cumulative inflows in the first 7 total years on the gold ETF. What does that mean? Bitcoin saw about $38 billion of inflows in the first year. Gold saw that in 7 years. So what we're saying here is that gold saw about $38 billion to $40 to $50 billion of inflows, and in 6 years, those inflows sent gold an extremely mature market, meaning that $50 billion of inflows was nothing compared to the hundreds of billions of dollars of value that it had already held, trillions of dollars of value that it already held. We saw that drop in the bucket move the ocean that was gold 310% over the course of 7 years. Now, keep that in mind. Let's look at Bitcoin. Since we saw the introduction of the Bitcoin ETFs, Bitcoin is only up 125%. The ETFs launched at 50,000. Bitcoin is currently at 108,000. So track with me here. This is going to be a little complicated, a little complex, a little complicated. Gold, when the GLD ETF launched, was way bigger than Bitcoin was when the Bitcoin ETFs launched. Massively larger, because gold massively outdated the entire idea of an exchange traded fund. Bitcoin's market capitalization was far smaller when the ETFs were introduced than gold's market capitalization was when its ETFs were introduced. This means that the ETFs would have a disproportionately more bullish impact on Bitcoin than they did on gold. Furthermore, when the GLD ETFs were introduced, it took about 7 years, according to our chart here, about 7 years to get the first $50 billion or so of inflows. Bitcoin, in the first 18 months, has gotten the first $50 billion of inflows. This leads us to the conclusion that the Bitcoin inflows are massively more bullish than what happened with gold. So far, you have a much larger, much faster inflow from the rest of the market into Bitcoin than you saw on gold. Probably 10 times more bullish. In the first year, you would see Bitcoin surpass $10 billion of assets under management with the BlackRock ETF, IBIT, in 7 weeks, while it took gold, GLD, 2 years to get there. Within about 2 months, you saw over $10 billion of ETF inflows into all of the ETFs, and within 7 weeks, you saw $10 billion into IBIT alone. So we can see that the ETFs have been substantially more successful in Bitcoin than they ever were in the gold market. Okay, so let's go back and compare now. If we look at what happened in the first 7 years on the gold market, we saw a 310% movement in approximately 2,500 days. If you were to see the exact same movement, if they were just to do the exact same thing, 2,500 days after the launch of the Bitcoin ETFs, you see a 310% movement. If you were to see that happen, that would take us to about 2030, and you would see Bitcoin trading at, in 2030, roughly around 310% return. We're looking at roughly around $200,000 in 2030. So if Bitcoin just did the same thing that gold did after it launched, if it had the exact same inflows, the market was exactly as mature, exactly the same as it was before the ETFs launched, you would see about a $200,000 Bitcoin in 2030. But does that make sense considering how much faster the inflows have been into Bitcoin, which is one side of the equation, and how much smaller Bitcoin is compared to gold? Makes no sense whatsoever. Bitcoin is a smaller, more agile, more fast-moving market with 10 times the inflows. Does it make sense that Bitcoin would rally as fast as gold, considering the ETF inflows are 10x faster, literally at a zero, they're 10x faster, sometimes 20x faster, and the Bitcoin market is way smaller and more agile than gold, still only making up about 10% of gold's market cap? Of course not. Of course 310%, therefore, becomes the absolute worst case scenario. Absolute worst case scenario, Bitcoin is only worth $200,000 in 2030. What's more likely? 2x, 3x, 5x? Well, we're seeing 10x the inflows into the Bitcoin market, into the Bitcoin ETFs, than we saw into the gold ETFs. Could we reasonably say that Bitcoin could do, let's say, 5 times better than what gold did? I think that's very realistic. Well, if you multiply 300% times 5, you're looking at 1,500%. Is that realistic? Oh, absolutely, it's realistic. There's absolutely no reason to doubt that something like that is going to happen because of how much smaller Bitcoin is than gold was and how much more interest it has. So if we're looking at the next 7 years and you look at a 1,500% movement, you're looking at a $750,000 Bitcoin in 2030. Now that sounds more like it. And this starts to make sense too when you plug in something like a 20 to a 25% continual average growth rate into Bitcoin. You end up at about a $300,000 to an $800,000 Bitcoin in 2030, which takes you out to 2035, where Bitcoin is trading at between $1 to $1.25 million, and then that takes you out to 2040, where you see a $2 to $5 million Bitcoin. Something that I often do is I go to the calculator app investor.gov. I go right here, and I just try and figure out what makes sense. Let's say Bitcoin is currently trading at $108,000. No monthly contribution. We look at 10 years from now, which is 2035. We give it a 22% annual interest rate. Remember, the interest rate on Bitcoin, the continual average growth rate on Bitcoin has averaged about 60% in the last 5 years. So let's cut that by a third. In 10 years, you would be looking at a Bitcoin that is worth approximately $955,000. If you fast forward that another 5 years out to 2040, you're looking at a Bitcoin that's worth approximately $2.8 million. 5 years from now, you're looking at a $320,000 Bitcoin. But again, if you'll remember, we already established a $320,000 Bitcoin is like worst case scenario. What's more likely is something in 5 years from now, because of the impacts of the ETF, you're looking at something that's more likely going to be $400,000 to $800,000, $300,000 to $800,000, probably about $500,000 by 2030. Okay, well, what continual average growth rate do you need to plug into this calculator to get a $500,000 Bitcoin in 5 years? Oh my goodness. Do you need to put in a 28% interest rate? At that point in time, you're looking at a $7 million Bitcoin in 2040. And in 5 years, you're looking at a $430,000 Bitcoin in 2030. So what you end up doing is you end up saying that Bitcoin is going to grow much more rapidly over the next 5 to 7 years, and then it's going to slow down, and it's probably going to hone in around 18 to 24% for like the rest of the first half of this millennia, up until probably about 2050. And when you plug in that kind of interest rate, you're looking at probably let's call it 24%. And you plug in 25 years from now, because remember, we're now closer to 2050 than we are to 2000. So we can all kind of understand what that looks like. You're looking at a $40 million Bitcoin in 2050. Well, yeah, that's absolutely ludicrous. Are you sure? Are you sure? It's not. When you see the amount of debasement that's going on, the fact is the United States dollar is going to completely hyperinflate by then. The United States dollar is going to cease to function as a modern currency. $40 million won't mean anything. I mean, you won't even be pricing things in dollars anymore. You'll be pricing it in Bitcoin. And so that's kind of the way that I look at the long-term perspective on Bitcoin, and that's the data behind it. But what can we do with that in the short term? What we can do with that in the short term is we can look down here on the Bollinger Bands, and we can say, man, if you look at the 3 daily chart, those Bollinger Bands, they're very constricted. The Bollinger Bands are getting real tight here. There's a bit of a bounce just as of the last 3 days on the 3 daily Bollinger Bands. But what we're doing right now is we're establishing support on the 20 moving average on the 3 daily chart. If Bitcoin holds this, if Bitcoin just holds above 100K for long enough, it's going to have no choice but to go through a major uptrend. If you'll notice, Bitcoin has spent an inordinate amount of time above 100K. And if you look here, Bitcoin is now spending an inordinate amount of time above 105. Not only are we staying above 100K with confidence, now we're staying above 105 with confidence. We came back down here and backtested 105, confirming this major inverse head and shoulders pattern, which points to $125,000. If Bitcoin's going to be trading at $300,000 to $500,000 by the end of the decade, and you're going to see Bitcoin trading at $1 million by 2035 and $2 to $5 million by 2040, and possibly $10 million or higher a coin by 2050, which is almost a foregone conclusion unless quantum computing destroys the Bitcoin network, which it probably won't, then it makes absolute sense that there's no room for Bitcoin to just go into a bear market right now. It doesn't make any sense, because how do you see a bear market happening where Bitcoin drops down to $30,000 in 2028 and then rallies to 500K by 2030? That doesn't make much sense. It just doesn't. Where's the sell side pressure going to come from? The world is waking up to the fact that the future for Bitcoin is ridiculously bright, not just because of the limited supply, but also because of what we saw with the gold ETF, because of what we're seeing with hyperinflation at the United States government, because of all of these factors. The future for Bitcoin is ridiculously bright. And so that leads me to my wisdom that I want to share with you today, which is taken straight out of the book of Ecclesiastes. Ecclesiastes chapter 11, verse 4. The English Standard Version says it like this: "He who observes the wind will not sow, and he who regards the clouds will not reap." What this means, this is a kind of a metaphor for a farmer, but it's actually talking about investment. If you are a farmer and you spend all of your time over-analyzing the wind to try and figure out when the very best time to plant your seed is, you're never going to plant the seed. And if you just spend all of your days looking at the clouds to see when the best time to harvest your crop is, you're never going to harvest your crop and it's going to die in the field. And so the lesson I want to give you is to zoom out a little bit. When you are analyzing the Bitcoin market, you should. Good luck finding a farmer who's not going to be able to tell you a little bit about meteorology. I mean, they're going to be able to tell you when it's going to rain. They're going to be able to tell you what the climate's like, what the soil composition is like. They're going to be able to tell you the analysis of their industry. You've got to be able to analyze the industry. It's important. Knowledge is power, right? But a good farmer knows that the best time to plant the crop is at a certain time. And you just need to do it, and you need to stop getting so fixated. Don't get stuck in paralysis of analysis is one of the most important things you'll ever learn in investment. So don't get stuck in paralysis of analysis. Understand where Bitcoin is going. Look at the signs. Look and see where the market is going in the long run. and just get an investment. Just get an entry and hold it for long enough. And as far as trading, I'll tell you what we're doing. Very simply, here's what I'm doing with trading. I am very confident that Bitcoin is going to break above 110. And I'm very confident that Bitcoin's not going to break below 100. Right now, we're in a range between 100 and 110. My money is on Bitcoin breaking 110. My money is not on it breaking 100. Even if we drop down towards 100, I would probably be entering into more of a trade. And I would just be doubling down on that trade and saying, hey, liquidate me below 100, whatever. I'm not going to, I don't see Bitcoin going below $100,000 right now. So I've got a small trade open, a few grand in a trade, and it's a 10x. And so when Bitcoin breaks above $100,000, then we're going to see us rally all the way up probably to 125. And so I kind of want to share with you where we're doing a lot of our trading now, because we've got some really cool deals with them. We have started working with 2Bit. Really excited to work with this exchange. It's a great cryptocurrency exchange. And if you sign up right now, you can actually get some pretty cool things like some free money. When you register with our link, you're going to get $50 for a welcome bonus. And when you trade your first $1,000 in perps over in perpetual futures, you're going to get to double that. So you get up to $100 just by doing $1,000 of trading. I mean, that's nothing. You do a 10x trade on $100 and that's, $1,000, and there you go. You got $100. You can walk away with it. Now, when you deposit $100, which you would need to do to get that $1,000 of trading volume, you're also going to get $30 for free. So in the first 2 minutes after signing up, you just made $130. And you basically had to do about nothing other than just sign up for 2Bit, and you made $130 doing basically nothing. So sign up today and make $130. But you're also going to want to stick around because 2Bit is a great cryptocurrency exchange. It's the exchange that I'm using now. Really loving the interface, loving how helpful the team is. They've been very helpful with us. They're doing a lot of growth right now. They've actually got about 3.6 million traders in the American market. Excuse me, not in the American market, in the world over. About 3.6 million registered users and growing all the time. $14 billion in 24-hour trading volume and over 1,100 trading pairs. So great cryptocurrency exchange for you to do your trading on. There's also a couple of other bonuses like $20 for your first trade. So make that 130 into 150. And you can get access to all kinds of different rewards when you sign up. So sign up for 2Bit today. Get access to all of their different trading functionality. And also check out their copy trading. Check out their bots. Check out their demo trading. A lot of great features over there that you're not going to want to miss. Guys, brass taxes, there's a lot of money to be made in crypto. I don't want you to miss out on it. So make sure, if you've not already, sign up for 2Bit, invest in some Bitcoin, hold it for the long run, and understand where we're going. Because these people that are trying to freak you out about a bear market are trying to sell you fear because somehow they're going to profit off of it. Either that, or they are so risk averse that they're never going to plant and they're never going to reap. Don't get stuck in paralysis of analysis. Stick some seeds in the ground and look forward to the day where you will get to harvest them because you made a wise decision today to invest in the market. Hope you enjoyed today's video. If you did, like the video, share it with somebody that you think would benefit from it. Sign up for 2Bit. I love you. Peace.